Leverage trading can be confusing, especially for beginners. But before experimenting with leverage, it's crucial to understand what it is and how it works. This video will focus on leverage trading in crypto markets, but a great portion of the information is also valid for traditional markets. Welcome to Caffeinated_Crypto, #1 YouTube channel for crypto education. What is leverage in crypto trading? Leverage refers to using borrowed capital to trade cryptocurrencies or other financial assets. It amplifies your buying or selling power so you can trade with more capital than what you currently have in your wallet. Depending on the crypto exchange you trade on, you could borrow up to 100 times your account balance. For example, imagine that you have $100 in your exchange account but want to open a position worth $1,000 in Bitcoin, BTC. With a 10x leverage, your $100 will have the same buying power as $1,000. Interesting, isn't it? Before you can borrow funds and start trading with leverage, you need to deposit funds into your trading account. The initial capital you provide is what we call the collateral. The collateral required depends on the leverage you use and the total value of the position you want to open, known as margin. Say you want to invest $1,000 in Ethereum with a 10x leverage. The margin required would be 1/10 of $1,000, meaning that you need to have $100 in your account as collateral for the borrowed funds. If you use a 20x leverage, your required margin would be even lower. But keep in mind that the higher the leverage, the higher the risks of getting liquidated. Apart from the initial margin deposit, you'll also need to maintain a margin threshold for your trades. When the market moves against your position, and the margin gets lower than the maintenance threshold, you will need to put more funds into your account to avoid being liquidated. The threshold is also known as the maintenance margin. Leverage can be applied to both long and short positions. Opening a long position means that you expect the price of an asset to go up. In contrast, opening a short position means that you believe the price of the asset will fall. Now the question is, why to use leverage? Traders use leverage to increase their position size and potential profits. But trading could also lead to much higher losses. Another reason for traders to use leverage is to enhance the liquidity of their capital. For instance, instead of holding a 2x leveraged position on a single exchange, they could use 4x leverage to maintain the same position size with lower collateral. This would allow them to use the other portion of their money in another place. How to manage risks with leverage trading? Trading with high leverage might require less capital to start with, but it increases the chances of liquidation. If your leverage is too high, even a 1% price movement could lead to huge losses. The higher the leverage, the smaller your volatility tolerance will be. Using lower leverage gives you more margin of error to trade. This is why Binance and CoinDCX have limited the maximum leverage available to new users. Risk management strategies like stop loss and take profit orders help minimize losses in leverage trading. You can use stop loss orders to automatically close your position at a specific price, which is very helpful when the market moves against you. At this point, it should be clear to you that leverage trading is a double-edged sword that can multiply both your gains and losses exponentially. It involves a high level of risks, especially in the volatile cryptocurrency market. You should always exercise extreme caution, and don't forget to understand how to use leverage properly and plan your trading strategies. How to do margin trading on CoinDCX and Binance. In CoinDCX you can trade 250 plus cryptocurrencies in margin. Just select trade and click on margin. Select any coin of your choice. Let's select Bitcoin for example, choose from long or short depending on your analysis. Here you can choose leverage up to 10x, as shown. In Binance, first you need to go to trade and then click margin from the top navigation bar. Then click on BTC USDT or search for the pair you want to trade. You'll also need to transfer funds to your margin wallet. Click transfer collaterals below the candlestick chart as shown. Select the wallet to transfer funds, the destination margin account, and the coin to transfer. Enter the amount and click confirm. In this example, we're transferring 100 USDT to the cross margin account. Now go to the box on the right. Choose either cross 3x or isolated 10x. Select long or short depending upon your analysis. And voila! Now you know about leverage trading. Hope you guys like this. Download CoinDCX, India's best crypto exchange. Link in description. Your host DJ signing off. Goodbye, be back soon.